to the Business Snapshot, as we give you everything that you need to find out in the world of business. We go straight to it as we find out what stories are making headlines and what you need to know. Let's start it off on the local front as we find out that government has been effective in controlling their expenditure. Now, economic and financial expert Andrew Chibuye says government has been ineffective as its inability to control the expenditure. And Chibuye says Zambia's economy has taken sick and various alignments such as excessive debt, which has caused it to be in hospital. Meanwhile, Chibuye says the country has been tough on citizens, especially the less privileged. Now, in more of this report, when he featured on the Sunday interview, Chibuye said the UPND has shut financial discipline, and they have shown it. Generally, if you look at the fiscal discipline, I think the target is about the GDP deficit, which is around 3.1% in terms of controlling their budget deficit. It is normal to operate on a budget deficit, and it's actually a very agreeable target, but it is almost crying out with the less fortunate. Now, in more stories that we have for today, economist warns drop in inflation not sustainable without BOZ intervention. Now, economist Noah Kawita says the drop in inflation may not be sustainable without continued intervention from the Bank of Zambia. Now, Zambia's annual inflation rate showed up to 13.0% in July 2025 from 14.1% in June, driven by declining food and non-food prices, according to the Zambia Statistics Agency, Zamstats. Now, in an interview, Mr. Kawita has commended the central bank's release of dollars into circulation for strengthening the local currency, citing that the law of demand and supply. He, however, warns that the inflation and its rate may only be sustained if the Bank of Zambia continues to intervene, as the current business environment is unfavorable. Now, Mr. Kawita has highlighted the key sectors contributing to inflation reduction are underperforming, particularly the energy sector, which is operating at about 30% capacity, and has emphasized the need for sustained support to maintain economic stability. Now we move on to some international stories that are making headlines, and well, the oil giant or BP says it is making its biggest oil and gas find in 25 years. Energy giant BP says it has made its largest oil and gas discovery this century as it fits and shifts its focus away from renewable energy and back to fossil fuels. The UK firm based said on Monday that it is conducting tests in the sites of deep water off Brazil's east coast, and the discovery could play a major role in BP's plans to increase crude oil production. Company executive Gordon Birrell says the discovery is BP's largest in 25 years and that the firm will explore building a production hub there. In February, BP slashed its planned investment in renewable energy and said it would spend, millions of dollars on a year and its oil and gas operations as it aims to boost investor confidence. BP said it had found roughly 500-meter areas of oil and in gas in the Brejinag block in Santos Basin, 250 miles off Brazil's east coast. It said its discovery was the company's biggest since the Shah Deniz gas field in Caspian Sea in 1999. The find adds that BP's several other discoveries of energy revises this year, and we see how their reserves, including those in the Gulf of Mexico, which is called the Gulf of America by the administration of US President Donald Trump and Egypt. Now, this is another success in what has been an exceptional year so far for our exploration team, said Mr. Barrow, as the firm's executive vice president for production and operations. BP's attempt to transform itself into a net zero energy producer has faced major hurdles since it put its plan into action 5 years ago. In 2020, the COVID-19 pandemic pushed it to $5.7 billion in its annual loss, but it took up $25 billion with a hit 2 years later from writing off a strike or a stake in its Russian energy business and to start over with the Ukraine war. However, on Tuesday, it revealed better than expected result for a second quarter of 2025. Underlying replacement cost profits fell by 15% compared to some 6 months in 2024 to $2.4 billion, and it was better than the $1.8 billion analysts had in its forecast. It is an improvement in the first quarter figure. These are some of the stories that we had on the Business Snapshot. More is yet to come. Good afternoon.